Hi, in this video, we will solve an example sum for the preparation of the Income and Expenditure Account. This account is a nominal account going by the rule debit all expenses and losses and credit all incomes and gains. So all incomes will be credited to this account and all expenditure will be debited to this account. The items which are shown in this account will be only revenue items, and all items will pertain only to the current year. Non-cash items like depreciation will appear on this account, and adjustments such as prepaid expense, outstanding expense, accrued income, and income received in advance will also be adjusted in this account. This account will not have an opening balance. On balancing the account, where the income side total is greater than the expenditure side total, we will get a surplus. And on the other hand, where the expenditure side total is greater than the income side total, it will be a deficit. So let's go to the example sum. Example sum. From the following information, prepare income and expenditure account. So we have a list of particulars. The items are given along with the corresponding amounts. Let's go ahead with the solution. Solution. Income and expenditure account. For the year ended the date is not given. Left side debit side, right side credit side. All expenditures debited to the account. Expenditure, inner column and outer column rupees. Income, inner column and outer column. The first item, fees collected including 80,000 for the previous year is rupees 3,80,000. The next item, it says fees outstanding for the year is 10,000. So let's treat that fees collected, it's an income, so by fees, the total fees collected is 3,80,000 rupees. We'll subtract the amount which pertains to the previous year. So less previous year, 80,000 rupees. We are left with 3 lakh rupees. But there is fees outstanding for the current year, rupees 10,000. So we'll add that amount. Add current year outstanding, 10,000 rupees. The total amount of fees to the outer column, 3,10,000 rupees. The next item, salary paid including rupees 3,000 for the previous year is 28,000. And the next item, salary outstanding at the end of the year is rupees 1,000. So to salary, the total amount which has been paid, 28,000 rupees. We will subtract the amount which pertains to the previous year. So less previous year, 3,000 rupees. We are left with 25,000 rupees. And we need to add the amount of salary outstanding for the current year not yet paid. So current year outstanding, 1,000 rupees. Add it and we are left with 26,000 rupees in the outer column. Let's go ahead with entertainment expenses. 2. Entertainment expenses 3,000. 2. Tournament expenses 12,000 rupees. 2. Meeting expenses 18,000 rupees. 2. Traveling expenses 6,000 rupees. It says purchase of books and periodicals, including rupees 19,000 for the purchase of books is rupees 29,000. Purchase of library books is an asset, a capital expenditure. However, the purchase of periodicals is a revenue expenditure. So we'll write only the amount which is pertaining to the purchase of periodicals in the income and expenditure account on the expenditure side. 2 periodicals 29,000 rupees minus the amount for purchase of books, which is 19,000 rupees. We're left with 10,000 rupees purchase of periodicals. 2 rent paid 10,000 rupees. 2 postage and telephones 15,000 rupees. 2 printing and stationery 4,000 rupees. And there's an income of donation received by donations 20,000 rupees. So we've inserted the items. Let's balance the income and expenditure account. So this is the income and expenditure account prepared by us. We'll total the debit side first. The total of the debit side comes to 1,04,000 rupees and the total of the credit side comes to 3,30,000 rupees. I'm inserting the greater total on both sides. ₹3,30,000. And since the income side is greater than the expenditure side, we are left with a surplus. 2 surplus 3,30,000 rupees minus 1,04,000 rupees. The surplus amount 2,26,000 rupees. So this is the solution for the income and expenditure account.